How many of you love dogs? Most people. A few of you won't like the dog. I'll get like one evaluation like, you know, Coco's okay, but it's kind of annoying because she was bugging me. Okay. She'll usually leave you alone. But I mean, how many events do you get to go to where you have a house dog, right? I mean, that's pretty unique. So we're going to talk about you. Now, do you bark? You bark sometimes, don't you? Yeah, you do, huh? You know what she does that just kills me? The head tilt. When she like looks at you and you're talking, you know, the head tilt, it's so cute. Oh my God, it's amazing, right? So anyway, you're getting some pictures of Coco up here, hopefully. Okay, so anyway, let's talk about the dogs that don't bark, because I think this is a profound concept. It is incredibly important. Why is it so important? Because it represents what we don't see. And what we don't see could be much more important than what we actually see. If I come home and come to the door, you know, the dog will know your footsteps and everything. It's amazing what they can hear and what they notice. They know how you walk versus how someone else walks, okay? If I come to the door of my house, the dog doesn't bark. If someone else comes to the door, the dog barks. Why is that? Okay? Well, it's obviously because the dog knows me, right? But what is out there in the world that we don't see? And how profound could it be in terms of the financial markets, in terms of our investments, versus what we do see? And we know how when we invest in a pooled money asset, when we invest in a stock or a bond, the company in which we invest could be experiencing all sorts of problems. Okay? They could be on the verge of a patent infringement lawsuit. They could be on the verge of having staff members sue over sexual harassment. They could be on the verge of having their credit lines called and or having a walkout in one of their factories. They could be on the verge of having workers unionize and demand much higher pay. And a lot of times, we don't know any of this. It's a dog that doesn't bark. Yet when it comes to our real estate, do we hear the dogs barking or not? We usually do, I say. Because whenever there's a problem, when the tenant doesn't pay rent or they don't pay on time, that's a dog that barks. We hear that, we notice it. And it affects our state. It affects our mood, okay? So let's see what Sherlock Holmes has to say about this.
Is there any other point to which you wish to draw my attention, Mr. Holmes?
To the curious incident of the dog in the nighttime.
But the dog did nothing in the nighttime.
That is the curious incident.
That's really important, okay? I mean, that is so important. In so many areas of our lives, this is an incredibly important thing, okay? The dog didn't bark because the dog knew the killer. The thing was about, why didn't the dog bark? If there was an intruder, the dog would have barked. The dog knew the murderer, so the dog didn't bark, okay? It's profound what doesn't happen. See, as humans, we have this absence blindness, okay? We ignore what we can't see, but we overemphasize what we observe. You know, if you ask Fernando or Jeremy, how you doing? I said hi to you, yeah. Who will be speaking, both of them, okay? If you ask them about their interest in quantum physics and all these crazy, you know, really far out high-level things, they'll talk to you about experiments and how important it is to notice what is unseen, what is not seen, what is not observed. And that's what we've got to do. Now, there's another concept that sort of relates to this a little bit, and it's called the zero-sum game. You familiar with the zero-sum game? Okay? This is an example of a dog that doesn't bark too, okay? Because the zero-sum game, I mean, it has many examples, but here's one concept around, right? And I'll take you back to the Reagan era, okay? And during the Reagan era, that was the largest peacetime expansion of the economy ever until probably Clinton. But Clinton had some really cool things going for him. He was very lucky to be there at a very important time in history when the internet came into being. Okay, after, of course, his vice president Al Gore invented it. Just kidding. But so that's a different subject. But looking at the Reagan era, there's one thing we can definitely see, and who was his, I think it was his chief economist, was Arthur Laffer, right? The Laffer Curve, okay? And I actually met Arthur Laffer back in about 1990 at a conference. He's a funny guy. He jokes around, and he's a really funny guy. So the Laffer Curve became very famous, and Reagan obviously became very famous as a president because of this. The concept being you lower taxes and you actually increase revenue to the government. Why would that be? Well, most people think, hey, if the government needs more money, we got to go out there and raise taxes. Well, I don't know. When you raise taxes, then everybody out there in the world reacts to that. And they say, okay, well, taxes are higher, I have less money to spend, so I can't hire that other person. And now that other person who would have been hired, a dog that didn't bark, okay, now is on the dole taking money from the government, and they're not working, so they're not making enough money to have discretionary spending. And so this is a spiral, right, that goes into the whole economic equation. But nobody ever sees that because it's a dog that didn't bark.